that's actually something that I want to actually look into, because I really want to help facilitate that, because I do believe that there's something valuable about looking each other in the eye. And I know our company's moving in that direction with our deal with Simmons College, where we now have the building where the Boyce Watkins Institute is going to be housed. We've got access to the whole campus. So we're going to use that space to do exactly what you're talking about. But I want to be able to do that in about 80 cities across America. So I think that, I think that's something that can become a deeper priority. I'm literally writing that down. That's why I stopped for a second. I'm a bad multitasker. Please forgive me. Let's see here. Anonymous viewer says, if Stash or Acorns goes bankrupt, are my investments still safe? Yes, because they're not allowed to just take your money and go spend it. They actually, the companies themselves, those shares themselves, they actually have your money. So your money is safe. And so there's hundreds of thousands of people that use Stash and Acorns. So yes, your money is safe. Latasha Watkins. Wow. Okay. That almost sounds like my sister's name. My sister's name is Latasha Watkins. I just started investing through Robinhood. Very small investment so far. But my question is, are the fees of 25% on $15,000 a large sum? Yeah, 25% is a lot. So you're not paying 25% though. You're not paying 25%. Go look at that again. I can't remember what the number is for Robinhood, but I know it's not 25%. That's insane. If it is 25% and I'm wrong, let me know, because I know it's not 25%. That might be like 1% or something like that, but it's not 25%. And even on Robinhood, they're not really managing your money per se. They're helping you to invest. They're an intermediary that gets you into the market. Let's see here. Steven says, do you think the bull market will continue for a long time? I have no idea. I just know I'm going to invest consistently. That's what I've always been doing. Sharonda, what kinds of accounts to get kids started with stocks? I know parents that will open up accounts at, either Stash or Acorns or TD Ameritrade, and they will just put them in their name. I'm not a big fan of giving kids a whole lot of money early that they can just do whatever they want with. I believe in giving them control or the ability to go in and make decisions with the money, but I don't give them access. I don't believe in giving them full access to anything until they're 35. I would give them some access early, but studies pretty much show that actually 90% or 70% of all wealth, and also 90% of wealthy families lose all their wealth within 2 generations. So effectively, what I would do is, open an account maybe in your name and just let them control it. And you can, in Ameritrade, you can get an account in your child's name. Just let them know that your child is under 18. Or individual ETFs. Okay, now with compound interest, the thing about compound interest is that there is no clear promised return on stocks. There's nothing there. Only thing that there is that you can rely on a little bit is dividends. Companies will usually not change their dividend because basically there's something called signaling theory that says that whenever a company drops its dividend, its share price drops a lot, because what happens is you're sending a signal to say that you're having financial problems. So it's just like if you've got a relative or let's say your dad sends you money at school every 2 weeks, and you normally get $500, and then suddenly your dad is only sending you $50. Well, that what's happened is you're going to interpret that to say, oh, is daddy having financial problems? Because according to signaling theory, your father is signaling to you inadvertently that he's having financial problems. So when companies drop their dividend, they're signaling to investors that they're having financial problems, and so that makes investors skittish. And when investors get skittish, then prices drop even further. So a lot of the market, a lot of the stock market, a lot of it's about maintaining confidence. There are a lot of economic measures that are based on the psychology of the investor, the psychology of the consumer. They measure consumer confidence. How good do consumers feel about spending their money? Because that tells you how much money they're going to spend. How good do investors feel about the market? Well, that tells you if they're going to start buying or if they're going to start selling, if they're going to go bull market or bear market. So all these things definitely matter. And so ultimately, when it comes to stocks, there's no promise of a future return. You get your return on a stock in 2 ways, either dividends or capital gains. Dividends are when the company literally writes you a check and pays you a dividend, which is fine. Capital gains are when the share price goes up. The share price should go up as the value of the company goes up, as the company becomes, as its earnings prospects go up. And so a lot of the interesting thing about a stock price is that a stock price is an embodiment of the future. It's an embodiment of everything the company is, as well as everything the company is going to be. So you can value a stock the same way you might value, if you're the New York Knicks, the way you value a basketball player might be based on what the player is, but also on the player's potential. Some players are young, their best years are in front of them. Some players are older, their best years are behind them. So, some players are in the middle. So ultimately, the way you value a player when you make a trade and how much money you spend comes down to what the player can do for you right now, as well as what that player might be able to do for you next season and beyond. And so by the way, let's see. So if you want to know how to log in and check your materials and all that stuff, go to theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. You can log in with your email address and your password you sign up with. Also, I don't know if I told you guys about our Melanated Mogul cards. What we did was we're working with the blackhistoryschool.com to kind of fuse economic history with black history, where we believe our kids, number one, I've always told you guys I believe this. I believe black children should be educated by black people. And so what we do is we try to provide low-cost tools that will allow you to do that. So one of the things we did create is we got together with our whole team of experts and got some artists and everything else, and we put together these really cool flashcards on black economic history. Now, you know about our financial flashcards. You may know about those, which have financial terms, which are pretty good. People love those. We're actually sold out of those, so we don't have any right now, but when they're ready, I'll let you know. But the Melanated Mogul cards are basically feature individuals all throughout black history who have built wealth, who have built economic empires, who've run major businesses, who have extraordinary economic accomplishments. And we believe that this should substitute the white economic history that your kids are getting in school, so that they associate wealth and power and investing with people who look like them. So if you're interested, you want to take a look, you want to browse, go to melanatedmoguls.com. That's MELANATED. MELANATED, melanatedmoguls.com. That's one word, melanatedmoguls.com. You can take a look. All right. Let's see. Q Drake says, hey, Dr. Watkins, do you have a tentative date for the opening of the Dr. Boyce Watkins School in Kentucky? I'd be interested in attending. Well, right now, Q, I met with the president at Simmons College, Kevin Cosby, and we talked about the institute. He's asking about the Dr. Boyce Watkins Economic Empowerment Institute that Simmons College is starting, and I'm going to go there to help run it. Right now, what we're going to do is we're going to host the All Black National Convention there. That's the main thing that's on our mind right now. And the topic of conversation for the whole time, but much of the time, will be focused on reparations and what that looks like, how we can fight for it, why we deserve it, etc. But also action plans to build around that. So I hope you'll come to the All Black National Convention. You can, I'll let you know, but it's going to be September 29th through October 1st this year. So that's the main thing we're doing now. At that point, what we're probably going to put together is something that's a hybrid between an incubator for small business and a class. Because the thing is, as you're building a business, you should be learning at the same time. As you're learning, you should be building. That's what black people got to do. We got to build and learn, build and learn, build and learn, build and learn. And the best way to learn is to build. But the best way to apply your learning, the best way to learn is to build, and building is also the best way to apply what you've learned. And so effectively with the incubator, what I want to do is have scenarios where people are actually creating real stuff, real businesses, and we're sort of talking through concepts that relate to what it means to run a business, what it means to run an organization and an institution. And then at the same time, though, with our kids, we're going to literally, and I'm not kidding with you, we're going to educate 100,000 black kids in the next decade on the foundational concepts that relate to entrepreneurship, wealth building, financial literacy, and cooperative economics. And we're not just going to teach them how these things work. We're going to teach them how to apply these things, how to set goals and accomplish them, but we're also going to teach them the most important part, which is how to build sustainable institutions. Building institutions is like building a house. If you are a great construction worker, but you never build a house, or all the houses you build are owned by somebody else, then what happens is you're building your whole life for other people and you have nothing to show for it. That's what we're doing a lot of now. We're working for other construction workers building houses in their neighborhoods. Well, imagine if millions of black people came back and were committed to building institutions right there in the black community. Well, just like building houses, when you have millions of people building houses all over the place, then 100 years from now, you're going to have houses everywhere. So what I want us to have construction workers in our community. I want us to have economic soldiers that are building things, and these things will exist 100 years from now. So we're going to focus a lot on building and institutionalizing things, and that's what the goal will be. All right, so let's see, Adrian.